Hi everyone, Jeremy Bailey, your Flying Realtor here. Welcome back to another episode of Tuesday's Tips. Today is Tuesday, May 19th, 2020. We have Karen Bacon in the studio with us today. Karen not only holds her MBA, she's also a certified financial planner. And she's going to be talking about three things with us today. She's going to be talking about how real estate ties into estate planning. She's going to be talking about cash flowing your estate and your investments into retirement. And she's going to be talking a little bit about how far does $1 million go? Let's jump on over to the studio and see what Karen has for us.
I own a company called Diversified Resources, which is located on Jefferson Boulevard in Warwick. And the company has been around since 1982. And it was actually founded by my father, George Wright. And I joined the firm in 2004 after working as a certified financial planner for another company for 3 years prior to that. Even though I knew at the beginning of my career 20 years ago that I would be joining my dad, I wanted to start off on my own with another company so I could, sink or swim, so to speak, and figure out whether or not I really liked it. But I did. And so in 2004, I joined Diversified Resources and really, built my client base from there. In 2015, my father retired and I purchased the company from him. Okay. So we are a federally registered investment advisor as well as a broker dealer. So we're a little bit unique in that I'm completely independent. I don't clear through anybody else. We are our own broker dealer. And so my father felt strongly, and I've continued in the thought that being independent is the way to go, because you're not, you don't have to sell proprietary products. I don't try to, do enough new business to win a trip or anything like that. Okay. So I don't have any sales goals. I don't have any sales contests. So that allows us to be really an advocate for clients and go out into the world of investments and insurance and figure out the best solution for them. And it's just a nice, my overall goal in my company is to create long-term relationships with clients. And so I have 4 full-time employees in addition to myself. And so our overall focus is to have a lot of touch points with people, make sure they're coming in frequently for their reviews, and provide a high level of service.
Wow, that's fantastic.
The last several weeks, what I've been discussing more and more with clients is, the adequacy of their emergency fund. That's big, and that also can be used towards down payments of homes. For years, talking with people about how much they have in just regular short-term savings to fall back on when life throws you a curveball. The kind of rule of thumb is 6 months of your living expenses. However, that differs depending on what you're going through. If your job's pretty secure, if your spouse's job is pretty secure, then you could get by with a little bit less. But if it's the type of income that might be more volatile, then it's better to have more. And so people through the years who've always had a good emergency fund, every discussion would be, maybe this is too much in cash. And this experience with the coronavirus has really showed what an emergency is. And when you need that and this is a prime example of when you really need to have adequate reserves for that. And then the other thing that is really more front of mind for a lot of people is estate planning with this event we're all going through. Some people I think whenever you have to think about your own mortality, it really makes causes people to pause. And often people tend to push that off and not deal with it. But now we've, seen that, hey, life is precious. We live for today, and you really have to go through this process of estate planning to make sure that not only your loved ones are going to be taken care of and have minimal, or real ease in the transition of accounts and insurance and things like that, and lower all the expenses to that by avoiding probate. But that's, all after you pass away. A lot of estate planning is also while you're living. So for example, I have a client now who is in a nursing home, and even though she has the funds to pay her bills, she can't physically pay her bills. She doesn't have access to her checking account and access to her mail. And so she's very concerned that her bills aren't getting paid. And so we implemented her power of attorney to make sure that everything got paid, and that gave her a lot of peace of mind.
Okay.
Or the other power of attorney is for healthcare. So making sure that, you have who would make a medical decision on your behalf if you're not able to make it yourself. And in Rhode Island, actually, there's a statutory form, which means you actually don't need to go to an attorney to have a healthcare power of attorney. You could just fill out the document and it's legally valid. So these are the types of discussions I have with clients. Although I'm not an attorney, the estate planning part of financial planning goes hand in hand. And so I really help to coordinate that discussion with an attorney that creates the documents. And then I refer attorneys who I think is appropriate for their particular situation. And then in regards to proceeds when selling, we try to think about, what are so you come across this large sum of money when you sell your house. And so we always want to first consider the tax implications. So often, if it's your primary residence, you have that exclusion of gain, and so there is no tax implications. But if it's an investment property or a second property, I always like to have a discussion with the CPA, who typically knows what the basis on the property is, and we calculate how much should be set aside to pay that liability the following April.
Okay.
But then often there's, additional monies above and beyond that. And then the question is, what is the appropriate place or way to deal with that? And so everybody's different. So I always look first to see how on track is the client to retirement goals. Do they want to retire early? Do they have the ability to retire early? What is that kind of, what other retirement accounts do they have available to them? And are they maxing that out every year? And sometimes when you start a little bit later in life, even though you're maxing it out, it might not be enough. And so we have to really do those projections and say, okay, based on what you have today, how much you're going to be contributing every year, a particular rate of return that making sure the person is comfortable with that. And I tend to be conservative with that rate of return number, means that under those assumptions, you'd have X amount of money at retirement. But then even though you could have $1 million at retirement, it's important to recognize that $1 million in a safe, sustainable way really only creates $40,000 to $50,000 of income every year.
Okay.
So you have that income plus Social Security, and let's say, just to pick a number for the illustration, that's $75,000 gross, and then net after taxes is $60,000. Well, $5,000 a month may not be enough to meet your needs. So everybody has different living expenses. So we have to really give some thought as to, what your living expenses are. Everybody's needs are different. And so working with a certified financial planner, my main goal is to figure out what are your overall financial needs, what are your goals, what are your objectives, and how could we deploy your money to make sure that those are reached. And at different times in life, there's different objectives. Certainly as you get older, the objective is to not run out of money. So you don't want to run out of air before you run out of money, because then you end up eating cheese sandwiches the last few years of your life. And so, as I was saying, when you have a lot of retirement funds, and let's say $1 million, people are often surprised that $1 million only produces $40,000 to $50,000 a year of income in a way that's sustainable. I mean, you certainly can withdraw $80,000 a year or $120,000 a year, but then if you're withdrawing that much, it's a liquidating account and you will run out of money. So we have to kind of put all the pieces together and analyze it, and really I try to help people make informed financial decisions. There's pros and cons to every strategy. There's pros and cons to putting money in a bank and having no risk of loss. And then there's pros and cons of creating an investment account and positioning it for long-term growth, which often could mean, especially in times like this, that is subject to short-term losses and more volatility.
Mm.
So it really depends on what your overall goals are.
Okay,
Do
I'm going
you
to put you on.
find that, oh,
Go
sorry.
ahead. Go ahead.
No, I was just going to ask, like, do you find, Karen, that in your business now that people are either more nervous or maybe not as confident as they were times when they've sat with you before?
Not so much. I think that's really the value of working with a financial advisor, is that you have more confidence in everything that you're doing, and you have kind of a sounding board as well. So, it's more my clients that are business owners, they're really certainly struggling, and this is a very unique time for them. And their overall objective, I have clients who own florists and own bakeries and own law firms, and right now it's just to survive. That if you don't have revenue, or you have very reduced revenue as a business owner, but yet you still have the expenses, you have to try to get to the other side when you could increase your revenue again. And certainly the PPP loan has helped, and for the most part everybody has received those funds. But now, there's a lot of kind of misinformation or information that the government has produced that isn't very clear and concise. So there's a lot of concern about that. How much exactly do I have to use towards payroll in order to have this loan be forgiven? Those kind of questions. And really nobody has, very specific answers for that. So it's, but I think as a business owner, you really learn to live with uncertainty, and you try to make the most of it. But for sure, the small business owners, their overall objective right now is just to survive, and should try to get through it. So certainly those clients have a lot more needs and a lot more concerns than somebody who still has an income coming in from a company and are just transitioned to work remotely, or perhaps a lower income. So it's everybody's different, but that's the value of working with the financial planner, is we really tailor the advice.
Well, thank you, Karen, for joining us for this episode of Tuesday's Tips. I hope you all realized how important it is to use a certified financial planner to help guide you through the turbulence of the financial market. I'm Jeremy Bailey, your flying realtor. Remember to keep your wings level, and I gotta fly.